A couple brutal months though, because the market just keeps going down, and so it hasn't been swinging as much as it normally does. But that is setting up for a really great rebound, because the market's just like a giant rubber band. You pull it down, you pull it down, you pull it down, and you're going to get that little snap back up eventually. All right, so I bet you're wondering, what is the mystery chart? And the mystery chart is Amazon.com. And what we see here is some very good behavior. It is tracking the MACD to the T. Now, oftentimes I'll look at a chart like this and I'll be paying attention to the 9 and 21-day crossovers when I'm doing swings. And these swings play out over, days and weeks. And certainly if you were just playing the 9 and the 21-day, you'd do okay. But if you were paying attention to the MACD, I swear this thing has hit every swing. So part of the thing that you want to do when you are looking at a stock is look at what indicators actually work for the stocks. Sometimes it's going to be the simple moving averages. Sometimes it's going to be the EMAs. Sometimes it's the MACD and the RSI. Get a feel for your stock before you do anything with money, right? You need to know how it behaves. Otherwise, you're just shooting in the wind. Okay, so let's take a look at this area here. It's kind of an interesting area. Okay, so like I was saying, this would be your normal 9 21-day cross. So you would exit on this candle right here, or this candle. And if you pay attention to that, you would have saved yourself, you would have saved yourself a drawdown of almost 20%. Let's see, 17.5%. And you would have saved yourself also 47 days before you'd become profitable again. Maybe even a little longer, 50. So these crosses are very important, especially when you have an extended move like this, where the moving averages start gapping far apart like this. And then when they start coming back together, this is your indication that you want to get out. But with Amazon, if you pay attention to the MACD, look at this. As soon as we had a rollover of the MACD, that was pretty much our top. And then also, when it got to the bottom and started rolling back over, this is a strong indicator here. And if you use this indicator instead of the 921, right, you would have got in right about here. If you use the 921, you would have got in right about here. Same price. So, working pretty well here. But overall, if you're swinging, you can see that you can swing trade Amazon pretty well by looking for this overextension where the moving averages get far apart, and then look for that MACD crossover to get out, or as the case may be, get in. And if you had used this indicator here, the MACD crossover, you would have got in and had at least an 8% gain. So not bad. Okay, so we do have some other stocks to talk about. So let's take a look at them. All right, next up is Occidental Petroleum. Its stock's got a lot going for it. One of the things I really like is it respects the RSI. RSI goes down, right, and that's a bottom. RSI gets overextended here, and that's a bottom. Again, RSI is down here and a bottom, and RSI down here, and that was a bottom. We technically should have gotten in a few days ago, and actually, candidly, I did put a short put spread on over here that expired with 100% gain. But we are at the same price. I think there's a chance that what we'll see here is potentially a slight pullback, although overnight oil has gone up 3% in futures, and we are sitting on this support. So the volume support is at $60. So if we do see a slight pullback, I would be tempted to pick up a swing here. The other thing is, beyond the technicals, there's more going on in the world, right? So OPEC just announced that they're going to cut over 1 million barrels per day, so that should help all the oil stocks. And then, of course, there's this mess here with the pipeline sabotage. It's crazy what's going on here. So it looks like the powers that be are looking for oil to go up. So an oil name like Occidental that is primed for a swing. Sorry about the cough. It's one to look at, and if it gets over the 200-day moving average, definitely I might look to hold that for the next leg up. In a previous video, I did talk about McDonald's, so I'll keep this one short, but again, it is respecting the RSI. You see the dip in the RSI corresponds to a bottom. Same here, overextended RSI down in the 20 range, corresponding to a bottom into the green cloud for Lux Algo. Also, here again, we are in the green cloud for Lux Algo and overextended. So we are looking at the Williams crash detector here. If we get a gray day, which is basically a close in the up direction, and this Williams crash detector turns gray, that'll be my indicator to buy. And I'll either be buying the shares directly or putting on a short put spread against the move, essentially. So just a quick note on McDonald's. It's just so primed and ready that I'd be remiss not to mention it again. And just a reminder, it is a J. Powell world, and we just live in it. So as you can see here, J. Powell needs investors to lose money. That's right, it's intentional. So they are going to keep raising interest rates until inflation gets in check. And there's several indicators that show that there's a way to go, specifically the difference between the Fed's fund rate and the 10-year yield. So let's just take a quick look at that. As you can see here, the 10-year note is rising up into the 3.8% range. The Fed funds rate is around 2.9. There's still a giant gap here, and unfortunately the 10-year keeps cycling up higher and higher. The Fed is going to try to get interest rates closer to matching the true interest rates out there, and that's just going to hurt stocks. And I don't see us rallying beyond resistance on the QQQ or this S&P 500. This downward channel, as long as this Fed funds rate keeps going up, which it's likely to do well into 2023, we're probably not going to get over this red line. So plan your trades accordingly. Pay attention to what the Fed's doing. Fed will go burr again eventually, but right now they are doing quantitative tightening. They are pulling the money out of the system. All right, last but not least, let's check out some silver. The thing about silver, and the reason I'm mentioning it, is the dollar has been on an absolute tear. And at some point, eventually, the dollar will cycle back down. And when that happens, I believe silver is going to start rebounding. And AG, First Majestic Silver Corp, is definitely something I'm keeping my eye on. As you can see here, it has a 9-21-week cross that it's formulating right here. The crash detector did turn off a couple of weeks ago. So keep an eye on First Majestic. We want to see this cross complete and ideally have a small upward move. And then remember, this looks like a boring chart, and this is multi-year chart, by the way, so this would be a longer term hold. This is not like one of your holds for overnight or a week or two. This is a hold that you're going to have for a few months. But we play for percentage in the swing trading game, and a swing up to previous resistance would be 110% move positive. That is substantial. So put this in your trading idea book. Keep an eye on it. And that is all we have for today. If you have any swing trading ideas, if you think I got it wrong, please put in some comments down below. Let's talk about it. Let's build a community of swing traders that share ideas. And please like and subscribe. It helps the channel a lot. And have a great trading week. See you later.